I think you're muted, Jonatan.
Oh, every time, man.
There you go. There you go.
I got this button here where I mute myself. Well, I'm glad you're here. Otherwise, that would be quite embarrassing.
You're
All
good.
right. Welcome everyone to the 5ers live trading room. It's Wednesday, and today I'm happy to be joined by the CEO of the 5ers, Saul. How's it going, Saul? And welcome. It's been a while.
Yeah, it's been a while. We had the bootcamp event
Yeah.
2 weeks ago, last week, and we're very busy with that, so didn't have a lot of time for to join the sessions. But yeah, excited, glad to be here.
You know, speaking of the bootcamp trading week, we do have a lot of new viewers and a lot of new followers and a lot of new members of the 5ers after that event. So I'm thinking, maybe to kick things off here, maybe you
Yep.
could tell us a little bit about your trading story, your trading journey, where you began, how long you've been trading, and what type of trader you are.
Yeah, we can answer that shortly. I discovered trading 2010. I was working in a hotel desk, and I was looking for some extra money. So I googled that, and that's how I came to Forex trading. And the opportunities. Of course, I got an advertising from a broker, and I started putting full lots on a small accounts, and I just lost everything very, very, very quickly, and understood there's opportunity here, but I need to understand what to do with the markets. And from there, it's just time, and screen time, charts time. It's spending time understanding what's the market. So it took me around 2 years to figure it out, and then from there only to mastering even more, the market side of trading. But then there's the trader side of trading, which is the most challenging because you're all by yourself, and that took me a while to understand the type of trading I need to do for myself, and slowly started going from large, the daily time frames into smaller time frames, and then to stop holding trades overnight because that was, not good for me. Yeah, and if you see me trading today, you would describe myself as a scalper because I trade on the smaller time frame. So yeah, I just try to take advantage of the small movements in the market repeatedly, and that's how I built my account, slow and steady.
That's interesting. So you were sitting at that hotel desk and you were thinking, how can I make some quick money here? And you Googled how to make money, side hustle, and then boom, it comes up in an advert saying like, here's a Forex course, go trade Forex.
Yeah,
and I think a lot of people
be your own boss at your spare time, online, anytime from everywhere.
Yeah.
All those.
Like be your own boss, but you have to go from working 40 hours a week to 80 hours a week
while trading. Yeah.
Yeah, exactly. No, that's great. So are you looking at any positions today? Anything that kind of caught your eyes in the market today? And by the way, guys, let us know if you do have any questions for Saul. This is a wonderful opportunity for you guys to ask the CEO of the company questions directly here while also watching us trade live. So let me know in the comments if you do have any questions. Yeah, do you have any positions open now, or have you been trading anything today, or how's I know you're busy with the company obviously, and you're running a company at the same time as scalping is obviously quite difficult. And I actually wanted to ask you about that because from my perspective, when I started trading, I got very interested in the idea of scalping, especially day trading. It's like, that fast action, quick money, getting in and out, making money, throughout the day, just quick in and out. That kind of excited me, the idea of day trading. But the longer I've traded, the more geared am I towards swing trading. And also, as someone who's not, obviously I'm not only trading all the time. I'm doing this, of course, and I work for the 5ers and things like that. Swing trading fits better into that lifestyle of mine. So how do you manage to be a scalper and also run a successful company?
Yeah, it is challenging, and it's true what you mentioned it, because actually, when people think, okay, go to lower time frames, just let me. I'm about to take profit in a little trade I'm taking. Let me see if I can.
Wait, you gotta share your screen. You're taking profits, and you're not showing us.
It's just a test trade. Let me see. Let me see if we can do this. I'll walk you through the setup in a minute. I'll just, let's see if we can squeeze some pips here.
Do you want me to add it, or do you want?
No, I can't add it. If you want, add it to the screen.
Yeah, let's bring it up so people got something to look at.
That's on your side, right?
Yep. Okay, that's on my side. Yeah, that's why nothing happens.
So let's see how this unfolds. I'll walk you through the setup in a minute. But yeah, people think that when you're scalping or when you trade on the lower time frames, you can actually make money faster. And in some, like, the reality is, when you're scalping, you need more screen time. You need to be more engaged with the screens, and you need to be in front of the charts for longer. Because very rarely in one setup on the 1 minute chart you will make the income for the day, right? So actually, when you have less time to trade, to spend time in front of the charts, you should go to larger time frames, and if you have more time, you should go to lower time frames. So through the day, only when I see, I have the charts open all the time, so I just, when I have some, in between sessions or emails or whatever I have, I just screening the charts. And if you have those setups that you've seen a lot in the past, and you have your levels already marked and everything, so when I see a good setup, I just go and take it. That usually doesn't take me long. And of course, if I can spare, let's say, 1 full hour in a good volatile market, then I can dedicate myself for that time. But with time, it's less and less common to do that. So usually on the accounts I trade, I have it open, and when I see things lining up, I just go and take that very good setup, and I just take the trade. So let me walk you through.
Can I just jump in there and say something? So it sounds like what you're talking about here is like you got the screens open and you're basically trading on intuition. Like you have a couple of levels open, and you're watching price action, and you're kind of getting a feeling for what price action is doing. And if you see that price comes down into your level and you're getting bullish momentum coming in, you're just going to put on the position, right?
Yeah, like I'm looking at, I've gone through this a couple of times, that I take my bias, or kind of what I want to do in the market, the direction from the dailies, and then I mark my key levels on the hourlies, and then the setups and the execution, I look for them on the 5 minute chart. So I set alerts for when the market reaches those 1 hour levels, and then from there I look for the setup on the 5 minute chart. And then the setup is very, it's very easy to spot sometimes, because you get used to those, so you kind of know what you're looking for. So when you see it, you just pull the trigger, and then you will either make money, or very quickly you will be in the drawdown, and you need to get out and wait for the next opportunity. But yeah, I just need direction, enough volatility. So maybe we can take this setup as an example, and I can try to show what I'm looking for. So I'm looking at the dollar CAD, and we can see, after the elections in the US, we've seen this push to the high side. Now, of course, I'm aware we have some key selling levels, okay, back here, that's going to work as resistance. But overall, my short term setups, my bias as we speak is bullish. Okay, we have this very large run, this first impulse, and we kind of stop at that resistance level. We kind of held, and we broke again, to the upside. So I'm just looking for price to come back, okay? And we have that 2 bearish days that are a reaction from the previous levels we saw on way back. And if we go to the hourlies, okay, we can see, the key levels, okay, the demand area. So we can see this push and continuation. I don't know if we have more, maybe probably down here, but that was already consumed. So this is kind of the relevant level I'm looking for. So now I'm looking for a reaction of price to this level, okay, which we're kind of testing, and now we're reacting, okay, and I'm expecting this movement to go all the way, okay, from this key level to next key level. So next key level on the hourlies is, I guess, somewhere there or somewhere there, okay. We have mid-range supply and extreme supply. So now I want to like attune that better, okay, to make sure that my eyes are correct, and I can see, on lower time frames that this mid-range, this is a good supply area. So I'm expecting price to go somewhere, okay, to visit that area again. So that's kind of my long-term target for these setups. So we're coming from this level, and I'm aiming, okay, we're now reacting. This push down, that was a reaction from this supply area. And I was, on the 5-minute charts, we can clearly see this level. Okay, so right at that level, we have also this one down here, but that kind of the moment where this impulse initiated, that's a small demand. So at that demand area, I was just seeing price visiting that demand area, and then I just started, putting some trades. And as I saw price action forming this candle, this rejection, that's where I'm expecting a little reaction to the upside. So that's a very, basic setup, let's call it that way. And now, I had a 3 pip take profit by default. And now, because I don't see, let's go to the 1-minute chart. On the 1-minute chart, if we zoom in a little bit more, we can see we have this, a tiny supply area. So I'm expecting price to go somewhere there. So that's why my second TP, I kind of take it a bit higher. Instead of 3 pips, it's going to be around 5 pips probably. 7 pips is going to be, if it goes all the way there. So that's kind of the setup. Is very, very basic. And after that happens, I'll look for another opportunity. The only thing I am noting today is like the volatility is not great. Dollar yen, which was with great volatility, now is completely flat. From the last weeks has been completely very, very small ranges, and not a lot of volatility volume in between the ranges I'm looking for. So dollar CAD is what I saw. Yeah.
We have the NVIDIA earnings coming up later today, and I think that might be something that's kind of holding the market back, because obviously the NVIDIA earnings coming out is a big event. It basically, if the earnings are better than expected, we're going to see the stock market going crazy. We're currently in an insane AI, maybe not bubble, but an AI rush, and I think the markets are kind of waiting for that. And I'm currently long on USD JPY as well, and I'm playing that USD strength, which feels weird because we have the USD is at resistance, it's at that high time frame resistance, but there's so much going on now from a macro perspective with Trumps and the tariffs, and it's a very interesting scenario where you have risk on and dollar strength. So. But I like this. I really like the USD CAD trade right here, because it's something that I've been watching this as well. I mean, that retest that you're getting in on. I mean, that retest also on the higher time frames. We did hit the higher time frame. We have dollar strength coming in. You're looking at the lower time frames, and I like the idea that you're looking at the levels on the. And by the way, you're getting good volatility here on USD CAD. Like that entry is just perfect because it's on a retest right there, and. Aren't you tempted sometimes, because this is a good entry, and if we see dollar strength here, we were probably going to go up to like 140, 0.3 or 140, 403, 400 and something like that, right? So I think, aren't you tempted to just hold a position like this?
I kind of I do, but I know when I'm when I go and try to let to pull my take profit higher to hold it longer, puts on me a lot of stress. It puts not stress, not really stress, but I want to be watching constantly what's going on with the trade. And I've just learned, just because it's not, it's not, there's no right or wrong here, right? Just I prefer, to be with the money in my pocket, and if I see another opportunity to join, then I will rejoin. But I would, I know I could, I took profit right there. I know from this point, from the 1 minute chart, okay, this could go down again, and then I'll be in my head, okay, why didn't I take profit? So,
by the way, Bitcoin is right now breaking into new all-time highs. We're trading at 94,400 ish. So we get new all-time highs. So it's just absolutely insane.
It's exciting to see. I'm glad to see how Bitcoin is really proving it's here to stay. And we'll come back in a minute to Bitcoin. I just wanted to end my previous thought, which one I forget.
The TP, moving the TP.
I think that was right. Yeah, like I prefer, for my long-term opportunities, for long-term investments, I have my solution for that. So I have my stocks and my investments that I just buy and hold, and I don't watch those. Okay? So those that I believe in those, and I just want to keep them for longer, I don't trade them. And for my trading, I just do what it's the most natural for me, which is constantly banking profits and doing that over and over again. Now for Bitcoin, it's exciting.
I'm looking at the screen here, and I'm almost speechless. I mean, I've been trading Bitcoin since 2017. This was my very first investment. Like, I'm at heart a Bitcoin trader, and I really do like the technology, behind blockchain, especially the promises that Bitcoin has on the overall financial world. And I've been accumulating Bitcoin, like, in this cycle. I did get in at the bottom. I've been accumulating Bitcoin since the summer of 2022. So I've been holding this position for like 2 years. And Amazing. I remember back when I started accumulating around 20K, 25K, something like that. I said, like, well, you know what? From adding Fibonacci extensions and all of that, 100K actually looks like a technically sound target, but I didn't really believe it myself. I'm like, it looks like it might possibly go in like a super cycle up to 100, but are we really going there though? Probably not. And now we're trading at 94. And to think that we're trading at 94,000 with Trump coming into office saying that he's actually thinking about adding it to strategic reserve, then what's the price? Like, where are we going? Like,
sky is the limit.
Yeah, sky is the limit. It's just absolutely, it's crazy. It's really crazy. It's a exciting time to be alive. That's for sure.
It really is. When you think about when we see at these levels, the 70 inch level.
That was just a couple of weeks ago.
Yeah, but you wonder why did it spend so many time around the 70s? What's special in the 70s? And I don't think there's something special in there. It's just so now every price could be the next resistance level. It could go to 100, 200, and then just there stand going sideways a little bit. It's kind of because it's the all-time highs, and there's nothing in the past like to say, okay, this is probably where it's going. It's just a lot of minds having the same conversation. Okay, a bunch of all saying, okay, where is this going? And no one has an idea, I believe.
I want to show you something where, like, this chart right here. I've shared it before, but looking at this, like when we were trading here, so this is the 20K region. Now this is a indicator on called the Bitcoin logarithmic regression, and it's on the log chart right here. And at the bottom we're seeing an indicator that is based on on-chain data for Bitcoin, and this is where we had the accumulation. So from my perspective as a long-term investor in Bitcoin, it's very simple. You buy when it's green and you sell up here in the sell zone, and which it coincides with this area, that area, this area, that area, this area, and then between 160 and 200,000 is the what I believe is the top of this move. And then you look at the time span. It took from Bitcoin from going from that area to that area around between 700 and 800 days, 500 days, and we're currently around 750 days. So this might happen like to this date, inauguration, when Trump has the inauguration. I mean, we're talking about the 20th of January. Imagine Bitcoin goes from this level to 160. It doesn't seem likely, but I mean, 100K didn't seem likely a couple of months ago either. So it's like, yeah, I think we're in for a wild ride here for Bitcoin, and trading in general. This year can be massive. I mean, I'm looking at we got the dollar currency index right here trading at resistance. But what if we break above? What if we start trading at the 110 level? Then we might be thinking about Euro USD going back to parity, which hasn't been trading back. Like it's been a while. If you go back to Euro USD, I mean, dollar currency index is pretty much the inverse chart of Euro USD. But I mean, to see euro dollar trading down here, it doesn't seem very likely. But if the dollar currency index breaks, and I mean, it's at that point we're in for a wild ride. So right now I'm positioned. I have a few positions open for the long term, and I'm actually betting for the dollar to drop. I'm betting for the dollar to put in the top here. So for me, I'm looking for euro dollar to come up and test the level where the move originated from, the dollar currency index move originated from. I'm also looking for a longer term play on Euro GBP, which is based on seasonality data. We see that for the last 25 days, Euro GBP has always been bullish in December, like 100% of the time for the last 25 years or 24 years. Euro GBP has always been bullish. So now at the end of the year, going into next year, I'm trying to put in a few long-term positions that I'm going to try to keep open for a couple of weeks. And I want your, what do you think? What do you think will happen with gold in current scenarios? Because I'm currently looking at potentially seeing a top formation here on gold, perhaps taking it lower if I get confirmation. What do you think about gold in this scenario?
Yeah. if I would share my screen, I have exactly like I have the same. I would draw exactly the same lines that you drew. Just from technical perspective, we kind of topped and we created a new low. Okay. And this is a great Quasimodo pattern, for example. Okay? We broke this low, but the break was significant. Okay, if we go to the hours, we can see the strength of the movements to the downside. So there is supply pushing this lower, and revisiting these areas, and from there reaction lower. That would be the confirmation of the Quasimodo. But the fact that we broke this low right here, that's the first signal of a potential Quasimodo. And that's a trend reversal pattern. And if we put it on the context of, all we're talking about right now, we need to find the reasons why, why gold would be going down, right? And especially, we see this, okay, it's not always easy to do this correlation, but where is people wanting to put the money in cash, in dollar, in gold, okay, safe because they're not trusting, the stocks, or actually in the stocks, and in the stock market. And if they're willing to go to the, to take risk, so people is pulling money off gold into the stock market or different markets. I think when around the election, when Trump comes with all these campaigns of America great again and the economy and pushing the economy and making the dollar strong again, and a lot of investment in local companies and all of that, maybe that gives this idea of, okay, the economy is going up or the companies are going up. It's a good moment to go into the stock market, and we see the markets going up, and then people are less dependent on going, or less willing to go into safe havens like gold or stuff like that. It's not always straightforward to understand the relationship between markets, but that could be an argument for what we're seeing.
It's interesting. It's an interesting scenario that we are in right now, because we're no doubtly seeing dollar strength. I mean, currently I'm in a scenario where I don't find myself very often. If I can just quickly share my screen, I'm in a long here on USD JPY. Now that's dollar strength, and I believe that we're might likely come up and test these levels again. So I'm in a long on, long in dollar here.
Yep.
But I'm also long the S&P 500, and this is a scenario where I haven't been in this scenario, I believe, since maybe even I started trading, where we have.
Why is the stock going up and also the dollar going up, right? Like.
But I believe that. I mean, I want to show you something interesting here. So this is the dollar currency index. You can see right here. This is the dollar currency index in blue and the S&P 500 in red. But this is what happened in 2016. What we see in 2016, when the election came along, we're seeing a positive correlation between the dollar currency index and the S&P 500. And that correlation is then breaking at the time of inauguration. So you see, after inauguration, here it starts going like a cross. The correlation is breaking, the positive correlation. And what we're seeing right now, I believe we're seeing the same thing. Dollar goes up, S&P 500 goes up. We even have it move down on the S&P 500, while we also see a move down on the dollar strength. So I think that we're going to continue to see a correlation between risk on and dollar. But
many times we see that when there's a lot of abroad investment into American stocks, at the end, to buy US stocks, you need dollars first. So if I'm holding euros right now, first I need to buy dollar. So I strengthen the dollar, and then with that dollar, I buy the stock. So you see that correlation of both dollar strengthening and stock strengthening. Regarding the dollar continuing strengthening and going into parity with euro, that's a scary scenario. It's not very scary, but last time we were there, it was already, it's 2022, I believe, we were at parity euro USD.
That's right. With the Corona situation, right?
Yeah, after COVID and all that in 2022, you think of there's a lot of things to consider, right? But not a lot of people are interested, or not a lot of countries and banks and the big whales, let's call it that way, they're not interested in a very strong dollar, okay? Contrary to what we would think. Especially if you think of the amount of debt that is international debt that is quoted on dollars. I don't want, if I'm holding a debt, especially if I'm a country and I'm holding a debt in US dollars, I don't want that debt to go, to become more expensive just because the dollar strengthened. So sometimes we see behind the scenes a lot of efforts in order to keep the dollar not so strong, just to avoid these countries or debt holders into having to work even harder in order to to pay that debt back. So that's what we saw actually in 2022, and that's how we saw the sudden spike. The sudden.
Yeah, this was one right here.
Yeah, that's Euro USD. Yeah, that spike from 2022. That. Okay, let's get away from this. From this situation, which is not. And again, the very strong. Going back to the stock example, if I'm holding euro and now the dollar, I live, you live in Sweden, Jonatan. So you have a euros over there. So now if you have to pay,
I got my Swedish krona, and it's not doing very well against the USD. Yeah.
No, okay. So
our
you
own
have
currency.
so you have Corona or you have euros or your local currency, and now you want to go into the stock market, the American stock market. Again, you have to buy an expensive dollar. So you say, okay, I don't want to lose my money on that rate exchange. I will invest in my, in the European market or in the pound market. So also for the American stock market, it's not great to have a very expensive dollar, okay, for abroad investors. So again, it's a very interesting, game of how money flows and the pros and cons of having a strong currency against a weak currency. And
that's a very interesting.
Market.
A very interesting approach. An approach that I haven't really thought about, the idea with depth as well. With it being too. Yeah, I like that. That's a very good. So one could believe that a drop in the dollar wouldn't be long-lived. It would be a short-lived drop, basically. If the dollar comes down to this level, we could expect a bounce that can really be almost like a slingshot, where it's like loading up and then boom, is strong volatility move to the upside, almost something like what we had around this time.
Yeah,
we got a question from Abe. Yeah. Okay, we have a question. Don't think I ever asked, but let's see, Abe. Yeah, interesting. Do you hold any crypto long term, or what's your long term investment in the stock market, maybe crypto, something like that?
I have both. But again, I don't trade those. I hold some crypto, and I every month or every 2 months I put more money into my crypto portfolio, especially Bitcoin. I'm not super convinced about the rest of the crypto projects, but Bitcoin I do. And the stock market the same. A lot of ETFs, that's the easiest. But sometimes. And having Michael from TTP close is a great advantage. Putting money into companies that you see they're going to be emerging markets like uranium and water and all those companies that are producing things that they're going to have a lot of demand in the long term. So
very interesting. I should send him a message, ask about some stock recommendations. I did like what you said about Bitcoin and well, basically you said Bitcoin because when you look at the value of the crypto space, it's Bitcoin. The whole promise is on Bitcoin. Everything else is, most likely 99% of all the crypto products out there except Bitcoin is going to eventually drop to zero. And if you look at that, if you look at the crypto products out there, it's just most of the ones that I was heavily invested in 2008 or 2007, they're dead. They're at lost 97% of its value. But you can, however, make money on speculating on a possible move to the upside on these products with Bitcoin rising in value.
Yeah, absolutely. If you're in hands-on, I don't, but I know Alex is very engaged in crypto, and he's looking for the next pump and up
the next meme coin.
Yeah.
Yeah, but that's
good
the
at
thing.
it. I'm just not there.
That's the thing I don't like with crypto. The fact that wow, it's really running now. The fact that everyone just gets in. This is a 1 hour candle. Let's go to the 1 minute. I mean, this is a big move. This is a strong move here, breaking straight out. But what I don't really like about crypto is the fact that everyone's looking for that next big thing, that next big meme coin, and everyone knows that it has no utility. Everyone knows that it does nothing good for the world. It has no utility. Nobody cares about that. It's just okay, get in, make some money. So that aspect of crypto trading and the crypto industry is more like gambling, right? It's just so. But when it comes to Bitcoin has real utility and real use case in the world, and a promise to really do
absolutely.
something.
And the fact that if you see countries like Argentina, El Salvador, Ukraine, of course, people had if they had their Bitcoin, in a hard disk, cold wallet, you can just take it with you wherever you need to go. You're not dependent on the bank to allow you to withdraw or whatever it is, and that's amazing to think that you can take your bank account with you in your hand, and then go to any other country that receives that same currency, and you'll be able to use it, right? I believe I can't remember the name of that attempt to do like a currency for the whole world.
Right. Yeah.
That didn't work out. But maybe Bitcoin is going to be that. And you can use that currency wherever you go without the need to be exchanging between fiat currencies. You just keep your same Bitcoin wherever you go in the world, which is
well
amazing.
If we're gonna get then what happens to Forex? We're in big trouble if Bitcoin becomes the one currency, because then there's no Forex trading.
Yeah, for trading, I think we have some more years until that happens, and in order for really replace, you need a bond market around it, and you need a lot of things to develop around it. But we're good. Trading Forex, we have a few more years of good trading and good opportunities. But eventually Bitcoin will slowly be or running in parallel or taking over some of the fiat currencies in the world.
I think it's going to become one of the currencies. It's not going to become one currency, but it's definitely going to become one of the currencies for sure. On an interesting note, I saw that Dodge, the altcoin that Elon has promoted and all of that. We actually talked about a setup here in the live trading room, but none of us actually took it. I remember me and Alex talked about this and we should have taken this. But the value of Dodge, the market cap of Dodge is like higher than higher than a very large percentage of the whole S&P 500. Really? It's like the valuation of Dodge is just absolutely insane if you look at the market cap, which is like, this is a altcoin with no utility, being promoted by the richest man in the world, who now also kind of works for Donald Trump, in his administration. It just feels like we're living in a dream world sometimes. It's just what's happening, the valuation of this is just going crazy. Let me see. I do have a few questions for you. Let's see. You're not like your method when you're trading. So we have a question here that says, what's your reference points when you scalp? Victor is using order blocks as confirmation and things like that. But in your trading, do you have any specific technique, any specific indicator? Like, what are you using in your trading? Are you only looking at price action, or is there anything specific that you are using?
Not really. Just some drawing tools to mark those key levels. I just if you understand, if the way I understand the market is just the price going from key points to key points, from key levels to key levels. So it's where is it going and how is it getting there? Those are the questions I ask myself. So with your eyes, you see, let's take Euro USD for example. Let's remove this. Okay, so you have Euro USD. So you show this, you show the current support level. Probably if we break that, we're going to parity. You mentioned that. So we are that, let's call it the support level. If we have a reaction from there, we're going to go to the next supply level, okay, available supply level, which from me it looks like here, and if it breaks that level, it will go there. Now, if you throw a Fibonacci from here to here, I'm pretty sure this level is around between the 50 and the 60% or something like that. But when you see price, you realize you don't need the Fibonacci to tell you that, because you're looking at price, okay? So you see where price was big movements big movements were initiated, and you can anticipate price will go back to that same level. So if we do have a reaction of the current support area and it's a strong reaction, most likely we're going to get there. Now, it might take some months or weeks to get there, but that would be a long-term perspective. So I know where I know I kind of that gives me the direction. Okay, if we see a reaction, okay, from here, then I want to go long because I know the target is this area here. Okay, so I know the direction. Then depending on how the reaction happens, okay, or once we're getting into this level, okay, it's different if we get very strong to here and then we will most likely break it and go to the next level, or if we come in a very weak way. We spoke about this, the fact that it goes, starts ranging before it gets there and starts slowing down before it gets to that area. If it gets there in a very weak way, then we will most likely not break this area and we'll see a rejection from that area. Okay, so that's it. I would wait. If right now I need to take a trade Euro USD just because of the risk rewards, I would go long, and then I would anticipate the reaction from these levels. I can set my stop loss, below the level if it breaks to the downside, and then my TP, I don't know, around those areas before the level, and then to wait and see if the reaction happens. Then I want to see, okay, how is price approaching the next area. If it goes very strong to that area, then it would most likely break it and continue to the next available area. If it goes very slow to that area, we will most likely see a sell opportunity, and then I would wait for selling opportunities around this area, and then I would short the market from there. So that's kind of the concept. Of course, from there afterwards you have the setups, and then you have the execution and the management of the trade. But that's that we need another conversation for that. But then you realize you don't need a lot of indicators. Then that's it. That's all you need.
Exactly. I mean, it kind of goes back to what we talked about with the reading from an intuitive perspective, where you look at price and like if you have a price chart where you have a specific moving average on maybe the 20 EMA or something like that, well, you're looking for a price reaction at that 20 EMA. So when you get that reaction, you're looking to execute a trade. So the question is then, why do you need that 20 EMA? If you're looking for price to react to that 20 EMA, and then it does, and you enter a trade, what if you just remove the 20 EMA and you wait for that price reaction without the 20 EMA? Most of the time, you will see that price reaction is coming in at the 20 EMA, and it's coming in at perhaps a trend line or a horizontal level as well. And a lot of times you'll see that the reactions to the indicators or the technical tools, it's 90% of the time it's reacting on a horizontal level. It's a supply and demand level anyway. So I feel like, for me, I like using Fibonacci's, but I know I don't really need to. It's not necessary for me to do so, but I like having them on. It's just that it gives me a sense of, it's something I've been doing for so many years, and it gives me a sense of maybe some added conviction. So for example, if price hits the 50, that's good. But if it hits at a level that's also conflict with the 618, I know that statistically, from what I've seen, it has a slightly higher chance of being a better entry. But that's just logical because it's lower,
Yep.
It's just lower than the 50. So yeah, it's a very interesting way of approaching the markets. And I feel like, just like we talked about in the bootcamp week, we talked about the fundamentals of TA, how important that is. You wouldn't be able to take a single trade if you didn't know how the markets moved with having a basic understanding of market structure and horizontal levels. And actually, you could be trading just the same way as you're trading with only learning market structure and horizontal levels.
Absolutely.
And
absolutely.
So
Go on.
So yeah, I mean it's simplicity, just like Timothy is saying right here. Keeping it simple is the way, and I do feel like keeping it simple is the best way to do technical.
I remember myself experimenting back in the day with the moving average strategies, okay, the cross strategies and or fading the moving average. And the thing is, the market does not react to the moving average, reacts to price, right? To levels in the market. So if you have moving average, okay, any moving average, okay, price, for example, price will react. I don't know how to put this into words clearly, but when price will react to, the market will react to this level right here, okay? So if you have a moving average here, and the market goes there, okay, this is your moving average, and it doesn't react, you will not understand why it didn't. But if the moving average happens to be there, because that's the 200 moving average or whatever it is, it will react and will say, it works, okay? But it really doesn't have anything to do with the moving average. It just has to do with the key level in the market. So when I was trading moving averages, it was very frustrating for me, not understanding why sometimes it works and sometimes it doesn't, and why in the previous setup it worked fine and this time it didn't. So and it's just that it's just a line thrown in your chart. Why would the market respect that line, right? So when there's a correlation between the moving average and the key level, of course there will be a reaction from price, but it's because of the key level, not because of the moving average.
That's a very interesting observation. And you said when you were trading with moving averages, you were frustrated because you didn't have the why. Why is price reacting?
And then you tell yourself that story of, okay, keep doing it. In the long term, as long as you're consistent, you have the edge, and you have you have the win rate in your favor. But you need to be very consistent and taking the setups, and it doesn't work like that, right? You need to, at least for me, I was frustrating understanding. Okay, but why? Okay, if I know I have a 60% win rate, why the 40% is not working? What's different between the setups, making that 40% not to work out? So once you understand that, and you understand price movements and what's really initiating the movements in the market, it's easier to understand why sometimes the setups work and sometimes they don't.
And I think this is also one of the weaknesses in with technical analysis, because technical analysis does not answer the question of why price moves. And I think a lot of people, they give technical analysis a bit too much credit, because someone will say, oh, price moved because it hit this order block. No, it didn't hit that. It didn't move because it hit that order block. The banks are not looking at the order blocks. When I'm sending money from my company to another company, I don't look at order blocks. I'm just sending the money. I'm exchanging the money. So the money is changing hands no matter what level we're looking at. The reason why the market moves is because of the shifts in supply and demand, basically, out in the real world. So I think technical analysis answers the question where price will move from and where it technically will move to, but not when and how or why it's going to move. So I think it's very important to understand that we as technical analysts, we don't have the answer to why price is moving, and to put that into a system to really be able to say, okay, my system works because price moves from these levels. Like that makes no sense. Nobody cares about that level,
Absolutely.
So I think it's
and if we take the conversation back to Euro USD, we talk about the opportunity of or the possibility to Euro USD going to parity again, okay, to those levels, parity levels. And you see the order block here, okay. If we zoom in, I guess there would be an order block. Victor would be better with. But I guess for me that would be a demand area, right? Or I don't know what's the order block here. Maybe for Victor would be.
Victor's probably watching this. He's probably watching this and like
he's jumping. But I guess at some of those levels he would say an order block. Okay.
Yeah.
Now, if there's going to be a reaction of those levels, it's what you mentioned is not the order block, is all the interests in the world of not having a very strong dollar, okay? And then there will be an attempt to weakening the dollar, and then you will see the reaction, okay? It has nothing to do with the order block, but it has a reflection in the market. To our technical analysis, like.
Yeah, no, you're absolutely right on that, and we have a comment here saying that correct. No one knows why it moved, and this is I don't believe this to be true. I believe that after the fact we know exactly most of the time why the market moves. So yesterday we had a good bounce on the S&P 500, which then it got faded quite quickly, and we saw a huge sell-off in the equities market yesterday throughout for a couple of hours. And one could say that if let's see if I can pull up my screen here and show you what I'm talking about. So looking at the S&P 500 here, we hit this level. Okay, so we came up and we hit this level right here. We hit that resistance, and one could say that we came out when we had the first retest of this level. Okay, that's not a retest, but that's the retest. We had the first retest of that level. So one could say that, well, there's a lot of selling pressure coming in here because there is could be an order block, it could be an EMA or whatever. But we know what happened. We know that Ukraine fired missiles into Russia, and that caused a lot of selling in the market. And that's the reason why the market dropped. Now, technicals are telling us that if the market is going to drop, it's probably going to drop here. But why it's dropping, we don't know, because we can't predict the future. But it's dropping because things are happening around the world. Yeah. Look at current price action right now. We're ranging here on the lower time frames. Why are we ranging? Most likely because people are waiting for the earnings report on Nvidia. Nvidia, the market cap on Nvidia is crazy. It's insane. And if the Nvidia comes out and says that they missed the earning report, they might have some problems with some products, the whole market is going to sell because they're waiting for this news. So that's going to be the reason why the market is moving. And then you're going to ask yourself, why did it move from this level? Well, because it reclaimed support. And then it's going to move up to resistance.
Beautiful explanation, Jonatan.
Thank you. That means a lot coming from the boss himself.
No, really, that's what I struggled to.
No, but it is. I remember when I started trading, I used to when I didn't know technical analysis, I was thinking like, I want to buy Bitcoin here. Like, okay, let's look for reasons to buy Bitcoin. Okay. And then I failed miserably at that, So I went to technical analysis and I said, okay, let's find the reason to buy Bitcoin. And then I failed at that again. But then I figured out, okay, so what if you find a reason to be bullish, to buy Bitcoin, but you look at the technicals to know where you should be buying? And it's so much easier to have that overall bias when going into a trade. Like if you're bullish USD, you look for levels to buy USD. That's it. But if you don't have any type of bias at all, then I believe it's difficult to have a strong conviction trade, which is like, and that's one of the reasons why I'm like, for the last 6 months or so, I've been trying to create a bias by simply asking myself, are we in risk on or risk off? And now it's like I'm a bit panicking because it's like we're in both. We're like in dollar strength and risk on. I don't know what to do. It's like, let's long the dollar, let's just long everything,
Yeah, let's long everything.
Yeah.
As long as you keep your risk reward right, you'll come up on top. So
well, yeah, I guess. But Saul, I know that you have a meeting coming up.
Yeah, in like 5 minutes.
All right. So guys, if you have any last questions here for Saul before he jump on the next meeting? I got one question. What
Sure.
you have a lot of experience, and obviously have a lot of experience from your own trading, and you also have a lot of experience with trading from, being leading this prop firm company, and also being a leader in the prop firm industry. What are some key aspects or key traits or practices that you would say differentiates the best traders from the rest?
That I'm glad you asked, because it brings us back to the beginning of our conversation. At the end, if you look at what what these best traders have in common, those managing $500,000, $600,000, $1 million, $1.5 million, all of them have similar patterns, and one of the most important is that they master what they do. They're not looking around to, okay, should I? They're not looking at the next strategy, YouTube. They super expert on their method and their strategy, and you understand from hearing to them, from listening to them, you understand they really master that one thing they do. So they know exactly when to do it, when not to execute, what's a good setup, what's a bad setup. And it comes from experience, and it comes from screen time and from practicing, and that's very, very important, and it goes back to, okay, when I just started trading, okay, I kind of understood the market, but then I was yet to figure out myself. Okay, so these traders go through that process of figuring the market and the money management and the risk management, and then their self-management and the psychology and all of that, and it takes time, but that's a very important part of it. And they're here for the long run. They're not trying to make all the profits in one trade. They respect leverage, and they respect the losses, and they take off their account. That's pretty much it. It's not rocket science, but it's a complex process. But yeah, that's it. I would say that's what they do. They really master what they do. They know these methods inside out, and they deal with the losses and the risk management and leverage and all of that.
Yeah. So basically, to summarize that is, have a strong mentality, be resilient, but also pick, maybe if you're a technical analyst, pick one setup and become really, really good at that setup. And if you're a fundamental analyst, look for one, have one specific view of the market and become really good at that type of research.
Yeah, that's it. They do all do different things, right? By the way, some of them are scalpers, some of them are swing traders, some of them trade gold currencies, and they have indicators, some of them they don't. So they all trade differently, but they're all experts on what they do, and that's the key.
Yeah, and you want to find something that works for you. You want to find something that really fits your personality. Like you're a scalper because it probably works for you. You said, when you let a trade run, you get stressed, and for me, I don't really get stressed for that. I have the patience for that, and I've tried to trade like you many times because I want to be a scalper. I really, really want, and I've tried this in the trading room as well. For the viewers, they know. And it's like, I always come back to swing trading. It's like, I get so stressed, with scalping, like I can't do it. Yeah. So very important to find what works for you.
Yeah, absolutely. And actually, I'm glad for you, Jonatan, because scalping is a very non-effective way of trading. Let's call it that. You pay a lot of commissions and spreads and all of that. So
a lot of commissions. You pay a lot of. You lose your hair as well quite much quicker than what you probably would have done. All right, Saul. It was great. Great having you,
Jonatan.
On here.
Thank you, guys. Always glad to come. Till next time.
All right. Take care.
Bye.
Bye. All right. Here we go. I always enjoy having Saul on. He's extremely well versed with technical analysis, and as you heard, he also has a pretty, I would say, very good understanding of the market, you know, from a fundamental point of view as well. You know, we talked about the dollar strength, and he explained, you know, the different countries having to pay debt in USD, and if the dollar becomes too strong, yeah, I think better go back and watch the replay instead of me trying to repeat what he said, trying to sound smart. All right, if you guys like that interview or that chat, let me know in the comments, and make sure that you like the video so that I can send him the numbers, and I can say, look at this, boss, look at that, they like you. Let's do it another time. Okay, so I want to break down some of the trades that I'm in currently. Not looking great. I wouldn't say that it's looking really good right now. Well, it's looking fine, but I'm not making millions today, you know. I guess. Look at a question in hedging. Let's see. Great interview. Yeah, thank you. Okay, Saul is not here, but let's see. Maybe I can answer this one. What is your scalping typical risk to reward? So let's see. Now this is me trying to answer in Saul's place. It's probably a bad idea, but I don't think he looks at risk to reward. Like he trades level to level, and when he calculates he doesn't, you know, like what I'm doing here is I'm putting the long tool on here, and I actually care about the risk reward. I actually look at the risk reward. But when it comes to Saul, he has a very high win rate, and on average, I believe quite low risk reward on his setup. And what he does is like what, you know, I entered here on the S&P 500. If he would have taken a trade like this, he would probably have been, you know, in here, out, maybe in another position, out here, in here, out here, in here, and then maybe out here. So it's like following the flow on the very low time frame. And for that type of trading, you don't really have the time to calculate the risk to reward of your trade. You're just going to get in, you're going to get out, you're going to look at price, you're going to go with the flow of the market. For me, though, I tend to care about the risk to reward, and I try to put that into take that into consideration. So let's see. You hear how long it was quiet? Must be a record. Sometimes I feel like it's gonna take a minute. Be quiet. Just be quiet together. Just think. Think about what we're doing. Why are we here? Well, we're here to make money, obviously. But why? Why? I don't know. That's my thought process. Is there going to be any Black Friday offers this year? Well, to that I would like to say come back on Monday, when I believe the Black Week starts on Monday. So maybe not, but on Monday you will definitely know about that if there's anything going on. Would you consider 20 scalping entries in a day too much? I would, you know, I would, but if you're a scalper and trading all day, 20 trades a day is probably not too much. But you know, you got to make sure you make some money, because the commissions, you know, you got to pay commissions and everything on those 20 trades. Let me set up the giveaway, by the way. Let me help you guys with the giveaway today. So you're gonna set that up. You the thing with the 5ers is we don't do discounts too much, there's a lot of other companies out there that a lot of other funding firms that does a lot of discounts, but there's a good reason for that. There's a good reason, but we can talk about that someday. Okay, so let me set this up, how to enter. Okay, so I'm adding the giveaway and the secret code to the description of this video, so you can check out the description of the video, and I'm also going to add it to the comment section. And a gold view. Yes, let's take a look at gold. Let me the MM, I'm sorry, but I don't really have a good answer to that question, if I'm going to be honest. When it comes to hedging, that's not something I do with my trading, and I can't really give you a good answer to that question. You have to ask Saul, does he use the banana confirmation? Probably not. Probably not. Okay, so the positions I'm in right now. Let me talk a little bit about the euro. The secret code is in the description of the live stream. So you can go to the video. You can see the description, and the secret code is right there. I've also added the comment section, a pinned comment, and you can see the code right there as well. So the long on the S&P 500, we can explain this quickly. I mean, it's quite straightforward, right? It's not really. Should it be difficult to understand what's going on here, right? The S&P 500 is just moving in a very good trend right here. And we currently have a nice bounce right here on the code doesn't work, really? Does it not? It does work. Code does work. Seeing that at about 100 people already entering the code, so it does work. Okay, let's look at the S&P 500. So you see the S&P 500 here, obviously quite solid, simple break and retest on the daily, and adding the fib from this low to that high right there. Look at that.
I just saw you on your own, I felt so bad. I was just like, oh, gosh, holding up the stream on his one. Okay, so I thought, you know what, saves me from watching you and cringing.
Saves you from working. It's like, I got a reason. Well, this is work though. This is work.
No, I tell you what, we've been doing we've got a couple of things in the pipeline here at the 5ers, some things that are going to be released very soon, and I'm working very hard on them.
Yeah, looking
So it's
forward to
taking
that.
a lot of my time, but it's affecting my trading a little bit.
Bet it does. What do you think about this S&P 500 long?
Let's have a look. Let me have a look at S&P 500. I did take a short on gold this morning. Took a take profit. Went short again. Got stopped out, and now I'm long. So,
All right.
you know how it is. But it's actually worked
Right,
out good.
so
I'm just bringing back some of the profits that I had this morning.
you know,
S&P.
Saul, we talked about gold, and Saul actually looked at and said, you know, if we have a move up into this region right here, he might be looking for a, you know, if there's a rejection up here, he might be looking for a short on gold, and I tend to agree with that. I do tend to agree with that.
I may have been. I got a really nice short on the 15-minute time frame, and then I jumped back in a little bit early. I could have waited for the overall for a little bit higher, because if you have a look on, I'll show you anyway in a minute. But the S&P looks nice. I think it looks good to go up.
I think it does. So I want to break down some of the trades I have. I have one long on Euro USD right here. This is obviously a longer term long. I was hoping that this support level would have held, but it's not really holding. But we'll see. But I'm actually, you know, I'm kind of like there is, of course, the risk that we're gonna see more dollar strength, you know, and I think that that's definitely it seems likely that we're gonna get dollar strength, and if the dollar currency index does break out here, then of course we're going to see euro dollar breakdown. And I actually wanted to show you a type of analysis that I did this morning. So if we go to, so this is Euro USD. What if you go to USD Euro? Okay, so this is USD Euro. And then if we add to this, we add the dollar currency index, we see this. We get USD Euro, and then we have the red line being the dollar currency index. And here you can see that the correlation is pretty much perfect, right? So if we're expecting the dollar currency index to break, you know, the range lows here, or the range highs, or what I'm saying is use the range highs as resistance, and we can expect Euro USD, so in this case USD Euro, to move lower. So from this current price, I'm looking for the dollar currency index to come back and test the breakout area, which is right here, which would also mean a drop, or a drop on USD Euro for 180 pips to the downside. Now, of course, this is USD Euro. So if you go to Euro USD and we look at where we're trading currently, and we add to this, we add from current prices 179 pips, we come to around this level where we have a pretty decent resistance. And here, if we measure that move, it's about 300 pips. And again, we go back to USD Euro and we add back the dollar currency index. What we get here is a 300 pip move to the downside is going to be right here. Now let me take you back to the dollar currency, the DXY chart, which is this one right here. That level is range EQ. So we could see the dollar come down and test this level if the idea with dollar strength fails, and that would mean, of course, that Euro USD moves to these two levels. Now let me show you something else. and I think you're gonna like this. What's your name? Alex, not Victor.
Did you just ask me what my name is?
No, I asked myself what your name is, but you know.
Jordan.
Okay, so here's the seasonality chart, right? So we look at Euro USD. Okay, this is Euro USD. For the last 24 years, the average bottom being put in on Euro USD is today. Okay, today. For the last 24 years, the average bottom before moving higher is basically today, through the whole month of December. So this is the seasonality pattern on Euro USD for the last 24 years, where you basically have ranging price action throughout the whole year, and then a super bullish December, which of course aligns with the idea. And then you look at the dollar. So you look at the dollar currency index from a seasonality perspective. Well, of course, we're going to get the reverse. So the last 53 days, the top being today and the bottom being end of December. So we go back to the...
It kind of looks like it's breaking down, though. It looks like it looks like it's breaking down. When are we supposed to see this?
Yeah. Well, it depends on I think this daily candle. If this daily candle can kind of like continue to move higher, if we, if just imagine this daily candle closing as a bearish candle with a massive wick. Well, that obviously would confirm it, right? But there's another thing that's happening right now, and that's the Trump effect, right? So if we go back to the last time that he got elected, was right here, and the dollar was in a range, right? So we had a break and retest of the range EQ on the dollar when he got elected. Pay attention, Alex. You're looking at your phone. Look at the screen. All right, look at this. Now, I want you to look at this, right? So the dollar currency index is trading within the range and retesting range EQ when Donald Trump got elected in 2016. We go back to the current range. What happened here? Donald Trump got elected within the range, and it bounced off range EQ this time again. Okay, so it's exactly the same thing happening this time around. And we're now trading at resistance on the 20th of November. So if we go back to what happened last time, the 20th of November is around this area right here. And where is the resistance? It's right here. So we're literally doing the exact same thing. That's resistance, right?
Explain to me as if I'm like 5 years old. Buy or sell? Is this bad? Is this good? Are we buying or are we selling?
Okay. So if the dollar breaks out, we buy everything that has to do with the dollar. We long the dollar basically. If the dollar currency index breaks above 107 or 107.2, we buy dollar and we short the hell out of Euro USD, because I believe at that point Euro USD might even come down to parity before reversing. Look at what happened last time Trump came into office on Euro USD. That's the one. We came down and we traded at 1.03, which is, well, we got parity down here, but that's 1.03, and that's the bottom, and that happened around the end of December. Remember, going back to the seasonality part, green here with the chart, looking at Euro USD, the seasonality pattern is telling us that the bottom of Euro USD happens around November, December. So either the bottom on Euro USD is now, or it's going to be in a couple of weeks. So if I'm right that, well, it's not really about being right or wrong here. It's just that if the dollar is at resistance now and it's not going to break out, I'm going to make money on Euro USD, because this will mean that we're seeing the bottom in Euro USD. if I'm stopped out on your USD and the dollar breaks out, we'll short your USD and I'll make money on that. So I believe we're at an area now on your USD and the dollar, which is basically strong move to the upside or strong move to the downside. I think though, with Trump coming in and adding the tariffs, I think yeah. I mean, it might be super bullish for USD just because of the tariffs, but it's also inflationary, which also could be bullish for the USD.
So you have made me even more confused than I was before I started this stream. Thank you very much.
Why are you confused?
I am confused about a lot of things at the moment. One of them is I don't listen, not get started with Pepe, but I did think we were going to have more of a push down on gold.
Yeah,
this is the trade that I had. This is the trade that I had on this morning. I'll go through the different types of lines in a minute, but this is the trade I got in this morning to the 50 EMA. That's which was an absolute beautiful trade. It went straight to take profit. And this area here was a strong support. And I did think it was actually just going to, range a little bit. It was going to break. It was going to come up, and then it was going to do something like that. And I was going to short it again, but it didn't actually happen. I did short within the range, which is probably something you don't really want to do. But now we can see it's pushing up a lot higher. Now, the reasons why all of these different types of lines here is just to show the EMAs and where it actually found support. The target for that first trade was the EMA, a 15-minute, 200 EMA on the 15-minute, which is a 50 EMA on the 4-hour. So that was where it found support. And that's where you can see you've had this really nice, super strong push up from here. And where I think we're going is the 200 EMA on the 4-hour. And that's where I got stuck today. So I'm long right now. I'm long from this area. And I'm aiming for that 200 EMA on the 4-hour with my stop below the range. And that is the trade at the moment. But I still think gold's going to actually come down. I do think I agree with what Saul is saying. I think for me, the reasons why I shorted this, I'm still got the reason why I wanted to short this in general is that we've broken structure. This is also coming into a golden pocket, as people like to call it, coinciding with an EMA with the bottom of this range here. So this is going to be a really interesting area to see what we're actually going to do once we get up there.
I think this is there someone playing like ping pong in the background, like table tennis?
Table tennis?
You know what table tennis is?
Yeah, it's a tennis on a table.
Yeah, you're very right. You're smart man.
No, I wonder where I got that from. I wonder where I heard that from.
But honestly, don't you think that you look at the graph here, you look at the higher time frames, like this is, to me, if we drop here, it's just gonna, like, we're gonna say, yeah, that was obvious. Like, if this is the end of the run for gold, then it's obvious right now.
Well, it's kind of shown us, we've had this massive trend on gold, pushed, found support. You've got all of these, areas where it's found support. It just keeps happening. It keeps happening. This is a change in characteristics right now. It's actually, it's broken. It's made a lower low. So it's so much better doing this on TradingView than MT5.
Oh yeah. I mean, I like I'm thankful for MetaTrader
Yeah.
when it comes to trading, but
So that's what I'll be checking. Obviously, you've got the daily looking like this. Let's have a look at the weekly again. What's the weekly? Well, the weekly's bullish as anything. If we were looking for really,
yeah,
if we're looking just on a weekly time frame, then we're still good to go, to be honest.
yeah.
At the end of the
But
day,
you know what they say. You know what they say. The break will appear on the lower time frames first, and then it's going to translate over to the higher time frame. So the weekly will always be bullish when the trend breaks on the daily.
The weekly looks bullish anyway already. I would love to see if we find the short here and it comes down and it makes that kind of, that kind of double top pattern, and then it just, something like that. I don't know what that is. That's a different type of pattern altogether. But basically, come down here and then go back up and makes that double.
That's a W.
That W pattern like
yeah.
that. We can get long again. We can get long, and that's and then it's just the same thing, the same pattern as we've always got, which is just totally bullish on the weekly time frame. So it's an interesting one. I'm trading gold on the 5 minutes at the moment, which I don't know how I'm doing that with a full-time job, which I'm doing right now, because my full-time job.
Yeah, that's the thing, with scalping. I talked with Saul as well, and asked him how do you how do you run a company? How do you be a leader in an industry while scalping? It's and he always says you shouldn't.
You can get into some really, really nice trades. Obviously, the trade we had on the 5 minutes today was just, I came into the office and I just looked at it. It was just breaking down in front of me, and I didn't even hesitate. I just jumped in straight away. It was this price action, and it just went straight down to the 15-minute, and I was like, oh, it's had a massive push early on. What I didn't notice, because I had such a blind spot of, okay, I think gold's going to come down, I didn't notice. Look at the time. This is on the London Open as well. Look at that time. The London Open's right here. That was the low of the session. So London literally opened with the low of the session, did the normal kind of range that we would look at. So you've got the range, you've got the breakout of the range, retest, continuation trade. And that's why as soon as I saw that range getting broken, that's when I was like, I've got to close my shorts right now, and I've got to get long. And that's what I've done.
But before I forget, but this question right here, dollar currency is strong, will it mean that stock goes down? So usually in a risk off environment, you see that investors, they are fleeing the stock market into the USD. But right now, people might actually be investing in the American stock market, and this is what Saul explained as well. By doing that as a foreign investor, you have to buy USD. You have to buy USD to buy American stocks, and American stocks going up is good for America. So the fact that the US dollar is rallying right now is not because of a risk-off scenario. It's a rare case where you see dollar strength and equity strength at the same time, and this is based on the perception that the American economy, and especially the USD, will be strong going forward, right? And that is also good for the American equity market. And whenever the American equity market is running, well, everything's running with America, so that, I think that's what we have right now.
I love, we were talking about yesterday as well, those psychological levels of the round numbers. And I didn't say give people a homework or anything, but I just told people just to have a look at them and see what kind of reactions. This is just a perfect example at the moment as well. 6,000 was a strong resistance on the S&P. We've had the break above. It hasn't been able to break. Above those levels here to come down. Broken the range, retest. It's just it comes off with perfect trades. Let's have a look.
I actually do have a smartwatch, and I'm gonna put on the heart rate monitor right now. See what it is. Would be interesting to see
How
if
big of a
it would.
position is your S&P long? Yeah, if you're long S&P, I think you're good.
Nice. Yeah.
You're good to go. I don't know if we've got, what else have we got? These are bonds. Somebody said, let's have a look at pound. Pound is just all over the place. Look at that. Super weak.
It's quite weak, yeah.
Like, so we've got this area, which is quite a strong area. I don't even think pound will get up there anytime soon. Now we've just got, this range. We've probably got a lot of orders up above these areas, so I wasn't surprised if price ranged from something like this, started going like that, bounced up, takes all of these highs, and then starts coming lower. And that's when you could probably get into a continuation short from there, probably. But you never know; it could just turn around. It could just break that, and then you'll get your really nice trade with something like that as well.
Okay, gotta guess my pulse. What's my pulse right now?
Look at an NZD, JPY.
$68. Okay, so it's 68. Now, I'm gonna look at a position I'm in that's not looking good, which is Euro USD, and I'll be measuring that again. Let's see, do we go up from 68 or do we go down?
So this is interesting. This might scare a lot of people. This massive move here.
74.
Really, what are you talking about? 74.
It went up. I like how I'm trying to explain something and Alex is not listening at all, but the comments, the chat is actually listening to me. Thankful for you guys.
Good chat. Oh, look at this. My smartwatch. Friends. Smartwatch friends. No, it's I was just looking at the New Zealand Japanese yen chart. Obviously, this is a weekly, even a massive weekly range. All of this is all just noise coming in. It's hit the 50, 618. It's
He has no idea that he's muted.
You mute me.
I did, yeah. Good analysis.
Wow, yeah. If you're gonna trade it, probably get.
That's what time frame you're looking at?
No, this is a daily.
Daily, yeah. That's just the range. Okay, so NZD JPY obviously quite weak because you look at the. You look at other JPY pairs. It's rather strong, I would say. Maybe not, but if you, I guess.
See what gold's doing. Oof. I feel like I'm gonna get my take profit soon. Kind of sucks that I have to give half of the profits back that I made this morning just to get that there. What other assets? Should we have a look at this ridiculous one? This is just ridiculous.
I gotta look up the market cap on Dodge because I do believe that somewhere I read that the market cap of Dodge is like higher than combined S&P market cap or something like that.
Straight up. This looks like it could be a trade as well. Got that really just like Really nice, rounded. Look for it to break the range. Cup and handle type of trade. Oh, what's... Or you could just get long off something like that on Doge. Or you could just close your eyes and just put money in it. Not financial advice at all. This is education only. But you could probably do that and probably make money. Solana on fire.
Okay, so Nvidia. Okay, this is interesting, right? We have we got the Nvidia earnings coming later, and Nvidia is actually over 7% of the S&P 500. That's massive. Okay, one stock
What's the
is
ticker for Nvidia? It's Nvidia.
NVD.
Nvidia.
Nasdaq isn't well. Okay, let me see.
Nvidia.
Yeah, it's NVDA. NVDA.
Bloody hell.
Wow.
Just get
Holy
long.
shit.
Just get long when you can. Obviously not here, but you'd get long on that EMA.
Yes, we do have the earnings Nvidia earnings coming out today. That's going to be massive. That's going to either push S&P and also it will kind of like have a trickle down effect. It's the earnings on Nvidia will tell us a lot about everyone's just waiting for that.
What kind of significant levels have we got? Yeah. That 100 level as well. See what's kind of didn't actually reach it. Can't believe Bitcoin is just sucking up everything though, isn't it?
It is. All right, so we're currently seeing a move lower on the S&P 500, and dollar is continuing to gain strength here. The S&P 500 just had quite the strong move to the downside here. It happened now. I wonder.
I think I wouldn't be surprised if it just gets bought up though.
Yeah, it's probably going to get bought up. I'm just in such a way too big position on S&P 500. So every tick to the downside kind of gets me a bit nervous, if I'm going to be honest.
I got my pension there. It better go up.
well, yeah. Kind of. I'm in a scenario where if the S&P 500 does not go up from here, I gotta,
where are you getting out at?
I got it below the I got it below 800 and 830. So it's like I'm good, I'm definitely good. I mean, I'm up like 1% already on this one. So
is that your stop or is that the entry?
My stop is below the daily bounce.
Just a nice, giving it room to breathe. I think that's a nice. Right on the gap.
Oh no, there's an actual gap there.
No, it's fine. I don't trade the S&P, so I don't know. I don't know the
Oh, there's
expense.
gaps all over the place. Like it doesn't matter.
Doesn't make
Like
a difference,
doesn't make a difference. Yeah, no, I'm definitely. Yeah, I want to check my pulse. I'm gonna check that pulse again. You're absolutely right. I got an alert on gold. What's happening on gold? Let's see.
Gold's just pushing. Did you have your
man.
coconut water this morning with your chia seed pudding?
What are you talking about?
No,
Coconut? You say
No, the reason why I'm saying is you're just talking about your pulse and stuff, and you're being very holistic. So yeah, I thought definitely you've had your chai pudding, your coconut water in the morning as well.
Right. No, but I did drink one of those. What it's called? I have to look at a translation of this. You know, like ginger, right? Like a ginger shot. But then I made my own ginger shot, and then I had chili pepper in it, and it's like that was
Chili pepper.
spicy. Yeah, dude. Like in the morning, it's nothing like waking up, having like strong coffee, and then having like a ginger shot with like really spicy chili.
Let's have a look at gold again. Have you ever had spirulina?
Oh, I know what that is.
Yeah, it's quite good for you. Let's have a look at my other account.
Is it though? It's probably bullshit. Like like most of that stuff is probably. You know what? I buy into that though. I do really buy into that. I got so many useless pills I take in the morning that I'm sure does nothing for me. It just costs me a lot of money. So yeah,
there's only
into
very,
that.
very, very specific supplements that I'd put in my body. Not too big on.
Like what? Legal ones?
Of course, legal ones. This is not the show to talk about illegal ones. Well, we've got 1,000 viewers. Seems a lot. Spirulina, not a pill, or like food. That's algae. Yeah. Spirulina. Yeah, I agree. It's really disgusting, but it's supposed to be good for you.
Well, I do take a lot of vodka.
That's an interesting supplement. Obviously,
that's an interesting supplement. That's not. I've stopped drinking alcohol since I've kind of like a couple of years before I started trading. So, but I would think that vodka does not go hand in hand with trading. Depends on if you're losing or winning, though. Maybe.
Yeah, Amiga's good. The only thing is you got to watch with a lot of these companies because they put the Amiga oil mixed with, seed oils like sunflower oil and stuff like that. You got to find a really good high quality one.
I do take omega-3 cold pressed from algae, so it's not from fish. From actual algae, because if you look at the omega-3 from fish, I mean, now the fish that comes from the ocean is just filled with different types of metals, right? So you want to make sure that the omega-3 comes.
How much do you spend on your omega?
Okay, so about $40-50 a month. Yeah, it's really expensive. Like it's expensive. And then me and my fiance shares it, and it's like 30 pills. It's like it's very expensive.
No way would I let
dude, it's quality stuff. Like it's quality stuff. It's gotta be cold pressed. It's gotta be from algae. Like just like you said, it gotta be high quality stuff, And then I take like D vitamins, vitamin D, like very highly condensed vitamin D.
Oh,
and I had to go to the doctor.
I can't believe I was that silly though to be trying to, because I hit the 15, I've hit my take profit. Why get into another short in the range? Like, why would I do that?
Why didn't you use long that retest of the EMA right there?
Oh, a long
tier. A bunch of. Oh, you're still long.
I'm long here now. My target's here. I'm long from this.
Wow, nice. That's a good one.
Nice. I shorted here for probably twice. Shorted here, thinking it was going to come down and continue on. But that's,
You know what? Like, why did we do that? Because
it's a setup I always do. This is a setup that I do day in, day out. This is my bread and butter right here. And I couldn't, for some reason, I was just locked on. The price was going lower. I didn't want to, I didn't want to take the trade. And then obviously, as soon as we broke out, I was just so underwater. I had to cut it.
Okay, so I think I know why we see a drop in equity. So have you seen that Ukraine apparently has started firing UK missiles into Russia? So UK earlier today gave the green light so the UK gave the green light for Ukraine to start firing their Storm Shadow missiles into Russia. So obviously with that, we are seeing a move higher on the S&P 500 and a move lower on the S&P 500 and a move higher on the dollar. Now let's hope that there's no massive strike back from Russia, because then it's on. It's the situation.
I just want to know who comes up with the names for these missiles as well, like Black Storm.
Storm Shadow is a pretty good name for a missile, though.
Yeah, it's like, do they all like sit around a table and be like, okay, what's your best name for this missile? And he's like, Stormtrooper 3000. I quite like it. And one guy goes, yeah, don't really like that one. I'm going to go with
Shadowfax.
the Falcon 500.
Yeah.
Oh my god.
Yeah. What about the S&P 500 killer? Something like that.
If they really wanted to, mess with us traders, they'd be like euro dollar long.
But what should we call this missile? Should we call it "You should have shorted"?
Yo, wow. Hold on. Yeah.
Because Trump comes in there and says, like, writes on it like US dollar to the moon, something like that. Okay, we're kind of getting a little bit out of line here. I feel like.
Does anybody have an asset that is really interesting to look at on a technical standpoint? Nothing fundamental, because we don't really do fundamentals.
Euro NCD, I believe, is one of the best assets from a technical point of view.
It's disgusting. Oh, that's a 5 minute.
Look at the 4 hour, maybe 4 hour daily.
4 hour trends look really good, but I'm surprised this didn't have a continuation though. That move there, because that looks really nice. You've got your really nice pattern there. You have a quasi.
Okay, we really need the Nvidia earnings to come out and be bullish here. We really need to push it upside. Really hope.
Oh mate, what a beautiful trade.
What I like about Euro NCD is the fact that on the daily, it's just the overall market structure of Euro NCD is it fits well with the whole idea of like accumulation and distribution and all of that.
Yeah. I want to see what it's like moving around these levels. Let's have a look. What kind of moves? Okay, so we have an approach on that level. Would we have got a trade from here? I'd say that was a nice break. Oh. So let's say sell there. Take profit above the high. What did you just do? Why did you just do that? Take profit. Oh, take profit above the high. That's why it closed. What an idiot. I'm going to go into the sell. Take profit above the high.
Oh man.
Yeah, let's see what happens to this. Oh, does he get taken out? Oh, what happens? Oh,
Nice.
Oh.
Trading like that, trading in the back testing, that's a really good way of learning price action.
I just love those round numbers. They're just really good to trade.
Yeah, I think you're onto something. Okay, so again, Bitcoin is just not looking weak at all. Like we had that news coming out. Obviously, we got the S&P 500 moving lower. We had a lot of volatility to the downside on the S&P 500 with the news that Ukraine started using UK missiles into Russia. And then we look at Bitcoin, nothing. It's nothing. Not even on the 1 minute do we have bearish structure. It's insane. It's getting bought up absolutely so quickly.
Yeah, but it's also taken all the liquidity from the bloody altcoins. And I've only got altcoins. I ain't even got any Bitcoin.
But that's the way it works, you know. You if you're trading altcoins versus USDT, you want to wait for Bitcoin to kind of calm down before altcoin starts moving.
Give us another. I want another asset that I can play around with this round number technique. Just give me another.
Maybe silver.
Another asset. Silver. Let's try silver. I want something that ranges, though. Euro CAD would be a good one. Okay, let's get some pretty round numbers. So that 1,500 would be. Oh. Yeah. So this is on a weekly. Let's say we looked at it like that, I guess, because it would be in anticipation. We've seen this loads of times. It's coming up to a round number. We'll go into a daily, 4 hour. Okay. We'll go into 15-minute. Okay, let's see what we got from here. Did we actually get anything? I want to take this short, yeah? So I'm trying to find a setup short. There's been quite a lot of washing of that area. I'm not going to get short until... Well, definitely, this is the range that we're playing in. That 1,500 area, or that 1.5, that is actually the range low. So it's actually a really good level. Let's see what we get.
Yeah, I'm actually starting to think that round numbers actually make sense.
Oh shit. Oh, I've gone too far. Okay, let's see if we get a retest.
But there is a reaction though, like a small reaction at least.
But I like those when it comes up to the level, holds on the level, and then on the lower time frame, that's when you get the kind of the range forming, break of the range, like we've just seen on gold, and continuation. That's what I'm looking for. This isn't really something that I would like to. This isn't what I'm looking for. Like I would actually go probably long around here, to be fair.
And
There you go. That is quite.
I think I have to make some plans for repositioning on Euro USD. I think we might actually break down.
See, I wouldn't short this here. This would be a long. Look, you've got a head, shoulder, head. Maybe see if it can come down just a little bit more. No. It's not a very good example. Let's try a different plan. EMA settings, it's 21, 50, and 200. Let's go with NZD. NZD CHF. A pair I have never ever traded in my life. That's an interesting number.
Right, the dollar currency index is looking very, very strong here. Looks like it might actually break out. And we're seeing the S&P 500 continuing to move aggressively to the downside. So we're definitely seeing a reaction to the missiles being fired by Ukraine. We saw the same type of reaction yesterday, though, but this is definitely this is more. You know, this is maybe not more missiles, but it's doing it one more time, which I feel is adding some pressure to risk here. Okay, guys, we're coming up to the 2-hour mark. We're gonna do the giveaway.
Round numbers above, and I've never heard that one. Okay, now that will be a sell-off, so I'm going to look for a retest on that level. If I get it, I don't think so. No. Well, that's a sell. Okay.
All right, you guys ready for the giveaway?
Yeah, I'm definitely. Let's see if this actually turns into a TP.
Okay, last trade before the giveaway.
All right, no, okay, hold on. Let's get off. Nope.
Yes, Munit, in the comments, that is true. We had Ukraine just fired UK missiles into Russia, and now Western official comments on first use of Storm Shadow rockets in Russia, and that did cause a move to the downside. But let's you're probably going to see that in the news in Newsday a few minutes anyway.
Okay. Well, that was a win. I think we should all start trading around psychological numbers and round numbers.
Yes, definitely. Okay, guys, you ready? Shabas H. Probably completely butchering that name, but that's it. That's the winner of today's giveaway. Thank you for joining us here today. And I hope to see you all in next week. Okay?
In next week, yep.
Next week it is. Next week it is.
Okay.
Okay, yeah, I was watching the comments. Okay, guys.
See you later.
That's it, guys. You can also, if you want updates on all the ideas and everything, you do know you can find me on Twitter as well. I do update you guys on Twitter on everything that I'm sharing here today as well, and giving you updates on when we're going live and all of that. If you want to have any feedback on the live stream, you can also send a message to tradingroom@the5ers.com with any questions that you might want to ask, any feedback or anything like that. All right, guys, that's it. See you guys next week. Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.